Hello traders, Gary Wagner here. About 11:15 in Honolulu, 5:15 in New York. It is Friday, finally, the 27th day of April, 2012, and this is the Daily Report for Gold and Silver, our weekend review. Traders, we do have the precious metals higher this morning, and the one thing that I can say, it's all about the dollar. We are looking at a 432-minute Henkin chart. This is of the dollar index, and you can see really this strong trend downward and this critical double bottom that the dollar is at. We'll be watching that throughout next week. That is going to be an indication of where the precious metals markets will go. To the precious metals markets this morning, we do have gold higher this morning, trading up about 570. 1662.80, 1663.80. That would be your bid-ask spread. Net change on the day, as I said, 570. Low 1650.50, high 68.50. Silver currently trading up about 18 cents, 31.27. 30.85 is the low, and 31.51 is the high. Traders, first market I want to look at today is going to be the gold market. And we have seen some very interesting activity this week in the market, specifically holding this support channel, this lower support channel that we have identified back a couple of weeks ago. Of course, we are pegging it off of waves 1 and 3. As you can see here, the market did come up, but it did come back down. It tested this area, but this area held. And that's what I find most supportive or interesting of gold, because right now I'm more convinced than ever that what we have identified in this triangle correction will give us some real insight and direction as to the future pricing of gold. You know, we had a speech by Bernanke, and this back and forth between there will be QE3, there won't be QE3, deciphering what Bernanke says, trying to read in between the words. Specifically, he was asked at a Q&A session following the press conference, and his answer was, and I'm paraphrasing, of course, but it was that this is a tool that we have in our economic toolbox, and it is on the table. In other words, it's there to be used if needed. That gave some hope to metals bulls, and that, coupled with the fact that there are again renewed concerns about the health of the Eurozone, has prompted gold to higher prices. Spain, their credit rating went from, I believe, a A or A minus, but they downgraded it to a triple B. I'm not sure where it was before, but it was downgraded to a triple B. And that is some of the indications of the concerns that they have with the sovereign debt crisis in Europe. We're looking at a 770-minute chart. We've talked about the fact that it held this area very well, trading at 62.63. But what I am noticing, and what's most important to me right now, and let me go ahead and blow this chart up for us, is looking at the Henkin candle sizes to give us an idea. Of course, on yesterday's show, we actually went ahead and identified this pivotal candle right here, a doji candle, and it is everything that we look for in a marketplace that's going to have that pivot reversal. Now, absence of lower wicks, very, very good. Body size, well, they're not that strong, but when we compare them to this last small rally, they're about the same size. And then, secondly, there is the absence of wicks in these Henkin candles, and that to me is an indication that the strength of the trend is in fact building. I wanted to expand our timeline. This is a 440-minute Henkin chart. It is of spot gold, and what you can see in this particular chart is get a better indication really of relative candle or body sizes. We look at these Henkin candles because we've broken it up into more candles per day. And as you can see, this is a doji candle again gets identified even in the 1440. It starts with smaller candles. The candle size does start growing. It loses the wick. So you can see really an acceleration of trend right in here. little bit of consolidation right in here, and then back to that uptrend as we go into the close for this Friday. One other chart that I do want to take a look at this morning, and that's going to be a weekly chart. Let me bring it up here. This weekly chart that we're looking at is in Heikin Ashi format. It is of June gold, the COMEX gold contract. I have also identified a Fibonacci retracement level on this one, so we can take a look at it more long term. I'm beginning this fib retracement of the long rally, meaning the rally starting in 2008 at about 650, taking you up to your record top. Why am I doing that? Well, because what we've identified is this particular point right in here. In other words, where the market is trading at right now is actually the 23% retracement of this entire move up. The numbers themselves, to me, math cannot lie, and it is a critical piece of information because when we consider the market itself and the identification of a triangle correction, that's what we're looking at here. And it is a weekly chart, so we're not going to see this chart go green until we get a good up week. That would have to mean next week. If we get a solid up week, we will get a green candle. But as you know, what do I look for at the bottoms of, or pivot points, reversals, not necessarily bottoms, but pivot points and reversals in a marketplace? I look for the shrinking in size of candle. I look for doji candles to appear. Typically you'll find one, but if you take a look at this, the last 3 weeks in this marketplace right in here can all be significantly defined as a doji candle. On top of that, when we consider that it's now back and currently trading 1652, that is that 23% level, I think that what we're seeing is that reversal indicator, and we're using the math components that we have, meaning Elliott wave, Fibonacci, candlesticks. Those are all math-based technical indicators, obviously, but they attempt to look at market psychology by identifying patterns, and those patterns, of course, can be identified with mathematic formulas. You can see that before these markets turn around, right in here, you get these dojis. Here, you get these dojis. Here, you get a small-bodied candle. Here, you get a doji. Here, we have a doji. That, to me, is a really strong indication that we're going to see higher pricing next week. Traders, let's take a look at silver. Silver has had a real strong showing. First, we'll take a look at the 420-minute Heikin chart. And as my daily subscribers know, this area that we looked at in terms of a resistance area and a support area, our resistance we've kind of pegged at 31.81 and then 33. Those are our resistance targets. I think that the most substantial of these two is this triple top right in here. Quite obviously, if the market does begin to trade higher, this is where it can possibly find a little bit of, a lot of resistance. On the other hand, we'll probably see a little bit of resistance right here at the 50% level. Now, this 31.81, take a look at that here. You can see that there's a multitude of resistance here. It breaks above it for a little bit, cannot sustain it, so we go back into trying to break above this market. For those of you who have been with me for a while, you know my basic rule of price action, and that is a market that cannot make a new high will attempt to make a new low. And as you can see, this market did attempt to make the new high, but it couldn't sustain it. That's what we talked about. So when it was unable to break the market here, we saw trading activity go back down to test some lows. Of course, it found support at this 61% level. Now, the bad news is, of course, we did get stopped out on the trade. The low here, and this is an accurate low, came down below, I believe, 29 and change, and it did stop us out. I did issue a buy recommendation yesterday for aggressive traders. For conservative traders, I'm simply waiting to see follow through, and I want to give it a little bit more time. We'll probably re-enter that trade on Sunday or Monday of next week. My daily subscribers simply wait for the trade alert, as I will issue that by a special email. Interesting week in the market. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review, and before with a trade alert. Bye-bye.